Hey, what's going on, team? I want to go over a play today that was noted on the watch list on Tesla. Um, so, starting off on the 1 day chart, yesterday I noticed that so we had this sell off right from earnings, and yesterday we had this climb up, and it closed really bullish at the top of this candle. It closed all the way up here. So I noticed that it was sitting right here under the 50 EMA on the 1 day chart. And you'll also notice that this level is right at 236. Let me just draw a line. So yeah, that's close enough. 236 right there. Um, I was looking for, I think I noted it on the watch list. I was looking for it to enter into this gap right here and start to fill the gap. I did notice down here that the RSI had started to curl up a little bit too. But just as easily as it climbed up, it could have gotten rejected at this level. But once we passed 236, which was the trigger level to take this stock long, we just went for it here. So let me jump into the 5 minute chart. Um, First off, you see this line right here at 236. I also drew that line based off of this level here. Um, whenever we gap down from earnings, this is kind of the level that we started to like consolidate around, right? So I knew off the bat that this level was going to be an important one. Furthermore, yesterday, like I said, we climbed up and we closed just below this 236 right here. So when we opened up, we had a bit of a sell-off on the overall market in the morning. So we opened up a little lower, and then immediately started to climb. The first entry that I noticed on Tesla here would have been right at the trigger. So we broke above, right, and we climbed up to 237. I always say if we make a dollar move above that trigger level, wait for a pullback because this is obviously an area of resistance, right? So it would make sense that when we cross this area, we're going to pull back and test it as support. And sure enough, that's exactly what we did. So entry one would have been right here at 236. You could have taken it at the close of this candle up here. You would have been down a bit, but just having the trader knowledge to know that we're going to possibly come back and test this as a support, I don't think you should have gotten faked out or stopped out on that move. I posted a guide today talking about the importance of scaling into positions to prevent yourself from being stopped out. So say you wanted to take 5 contracts right here, rather than taking the full 5 contracts at the break and close of this candle, you could have taken half of that. Maybe two contracts or 3 contracts. So that way, whenever it pulled back, you weren't down so much, and you maybe wouldn't have gotten stopped out as easily, and then added to your position as we started to climb up. So this was entry point one right here. As soon as we made this push up to the top, I'm a big fan of selling into the strength because look when we pushed up, right? So when we pushed up, we got to a high right here around 239.80. If you sell at this level, now you could have held, but if you sell at this level, look what we did for the next I don't know, 2 hours, 3 hours. You wouldn't have. You're just burning premium right here, waiting for this thing to make another move. So I always sell into strength, right? This was a great play right here by itself from 236 up to 239. You're looking at a $3 move there. Entry two, after you sold into that strength, would have been on this pullback right here to the 9 EMA. So once we get into 5 minute chart, I'm looking at these 9 EMAs and this 21 EMA. Entry two would have been right here. And again, you push up. We could have sold into strength here, or you could have sold into strength right here for two more gains, and then we consolidated for a little bit. I want to back up though and point something out from a technical standpoint. So there are moves that happen relating the day prior with the day that you're trading on. So there's a move called the red to green move, right? And essentially what the rules of this move are is that if a stock opens lower than the previous day's close, but then passes the previous day close, right? Closes above the previous day's close, there's a high probability that it's just going to continue up for the rest of the day. So on top of 236 being a strong resistance level, it was also the level for a red to green move. After we had those first two entry points and we had this consolidation period right here, somebody pointed it out that we were flagging. I wouldn't consider this an ascending triangle because it's too steep, um, or rather, it's not steep enough. So typically, like an ascending triangle would be like a push up to here and a pull back to here and a push up to here, pull back to here, and then a breakout. This was more of a channel trade, a consolidation period. But understanding that 240 was the new resistance zone once we got up to this point, a breakout above 240 would have been entry point number 3 to take this long. And one thing to confirm that this would be a good breakout point is you're looking at the volume bars. We have this divergence coming down on the volume bars, right? And then we finally see this one green candle. We pick up a little volume, but nothing. It's still not moving a whole lot. But then here, look at this volume spike here. As soon as you see that, you know it's coming back into play. So between these hours of like 8:30 to about 11 or 10:30, 10:30, 11, what happens is Wall Street goes to lunch, and typically algorithms take over the trading day. So you'll notice, I mean, even in any chat that you're in, the chat goes quiet for a few hours. You know, people are going to lunch. I'm getting breakfast at that time. So anyways, yeah, entry point 4 was right here, and then this was just a clean ride up this 9 EMA for the rest of the day, selling at 243. So we're looking at overall from 236 to 243, we've got a $7 move here on Tesla. And these contracts, the 235 contracts for this week's expiration were, I think they opened at uh, 350 or something, and I got filled right at 375. Those same contracts ran up to, I think, 925 or something like that. It was crazy. It was a over 100% move had you just held the thing all day. But like I said, I'm a day trader, so I like getting in, getting out, getting in, getting out, and then waiting, get in, get out, right? But that's all that I have on Tesla. So I hope that this helped you out. Now, as far as the future goes, or the next few days, we are in this gap area. So drawing a line from here, right? Because we can see that this was a resistance zone when we sold off and came up. Drawing a line from there, look at where we kind of came back down to after hours. So now that we're in this gap area, we can kind of expect it to go up. I think it will depend on the Fed talk tomorrow and how the general market sentiment is going. If it's good, I would take this thing long again tomorrow for a push back up. Maybe we could see like 245 or so. It really all depends. Anyways, as always, if this video helped you out, like and subscribe. Thanks, team. See you tomorrow.